have you all here today to sit down with myself, Sam, and Maxine on Hyper's startup community platform, Apollo. I'm just going to do a brief introduction on Maxine, and then we're going to dive in, which is going to be very exciting. But we are and very grateful to be joined today with Maxine, who really is a pioneering leader in angel investment, entrepreneurship herself, and venture capital. She's the founder and general partner of Co-Ventures. For those of you that may have not done your research or don't know, but Co-Ventures is Australia's first venture fund led by a solo female general partner, being Maxine, and the country's first dedicated pre-seed fund, which is fantastic for a lot of the founders that we work with here at Hyper. So their mission is to invest in firsts, supporting Australian founders as they build globally focused companies from day one, which is a super inspiring vision. I was just talking to the team earlier, but a few months ago, we had the privilege of co-hosting a pitch competition where Maxine served as a judge, and there was also a panel, and our team were thoroughly impressed by her insights and just making, I guess, that early stage funding process really understandable and relatable for people, which was great. So yeah, we couldn't be more excited to invite her, and she gratefully accepted to come chat with us today and share her knowledge to the community. So Maxine, welcome and thanks for joining.
Thank you so much for having me on. This is actually a great pleasure to be here and a great privilege. So I appreciate being here and excited to chat to you about early stage funding.
Awesome. Thank you. Well, before we start to dive into the nitty-gritty of early stage funding, I personally are really intrigued about your pathway to where you are now. I know you've been a founder yourself, but was keen to hear a little bit more.
Yeah, I mean, I think it depends on when you kind of start the measurement, I guess. When I the first company that you could say that I built was when I was in university. So I built a bunch of companies kind of as side hustles to varying great degrees of success while I was at uni. And it's kind of odd to say, and you mentioned there might be some folks here in Europe on the call, but mainly Australians. Yep. If I kind of take you back to 2008, 2009, when I was in university, the zeitgeist of the entrepreneur wasn't really a big thing in Australia. And so it wasn't really around. So building companies on the side was more of a cash flow solve than it was, something that people were doing, it was cool to do. So I built a couple of companies on the side, all in the kind of automation of services and e-commerce space. And then kind of grew up and decided I wanted to be a lawyer. And so kind of put those down and started practicing as a lawyer and spent about 10 years, actually. I was a paralegal first and then as a solicitor. I spent about 10 years in law firms, which is a real education in discipline and hierarchy, let me tell you. But so I was practicing, but the kind of itch just didn't go away. And so I started building companies on the side while I was practicing, kind of dabbled again in the operational side of an e-commerce business, and got to a point in my career where I kind of looked up and around and didn't feel the same kind of pull to continue on that progression. I didn't look like any of the people that were in the partnership, bar one. I didn't kind of identify with any of them, and so decided to do what I think probably a lot of people on this call have done in their career, which is kind of decide, hey, I actually want to build something. For me, I wanted to go and see what the future looked like, and the idea was to bring it back to Australia, and the decision was to go to the US and study at Stanford at the same time as build a company. So really just a very expensive cover story to get to build a company in the US. And so founded a company when I got to campus about a month after I got there, and built that company at the same time as I was studying. We raised pre-seed capital while I was studying, and then raised our seed round when I graduated, which was a whole, a beast. Let me tell you, I did not sleep much for those few years. Wouldn't recommend it, but / wouldn't have traded it for the world. So a complex one. So that was my first experience operating a venture-backed startup. And it was so different than operating, in many ways, so different than operating a bootstrap business. But in other ways, very, very similar. So really interesting to be on that operational journey. It was also my intro to angel investing. Again, kind of taking you back to 2007 through to 2017 in Australia, there wasn't a lot of kind of high-profile angels, or at least there wasn't any in my orbit. And so I didn't know that angel investing was a thing. I barely even knew that venture capital was a thing. And moving to the Bay Area was really where I kind of got introduced to those concepts. And so I started angel investing at the same time as I was operating through a community called The Council. Incredible community. Turned out in 2017, there wasn't a lot of women investing. And so it was a fairly kind of avant-garde thing, a novel thing to be a woman and an investor, God forbid. So a group of us all started investing together. We all happened to be women. We were all also operators and investors at later stage funds. And we started to kind of just try and learn together. And that was really my entry point into the investing world, and just an enormous kind of privilege to get to work alongside these founders at the time, extremely tiny check alongside their journey, and just throw whatever support, network, thought partnership, anything I could to help accelerate them.
That's an awesome journey, and thanks for sharing that, Maxine. I guess the biggest thing that I love about it, and certainly for founders, I guess feeling very approachable with you, is I can assume you've got a lot of empathy because you've been in that seat before. Whereas we find that it can be a pretty daunting experience speaking to venture capital, where it's people have only worked in corporate or just come up through that environment. So being able to take a step back and actually understand the person that's there, and not just think, okay, cool, well, how does this number fit into our checklist in a way?
Totally. Yeah, I don't think I will ever forget how daunting it was to pitch an idea. Like coming out of corporate law, where like you don't have a lot of celebration of like thoughtful risk taking, and it's like all about cost mitigation, and like, it's just a very different ethos than building a company. Stepping out of that, and also being in the US, right? Like I didn't know a single person in the entirety of the United States, including Hawaii. There wasn't a person under that flag who I knew who they were when I got there. And so the prospect of trying to raise capital from those investors was extremely daunting. So I don't think I'll ever forget. Like, I think I probably have like a somatic memory of what it's like trying to pitch those people, try to be compelling towards them, like speak a social currency that I don't know, like all of those things that is pitching a company. And similarly, I don't think I'll ever forget when Dustin Dogano, who was our first pre-seed investor into the company that I was building at the time, was like, yeah, I believe you. Like, I think there is a huge business to be built here, and I back you and your co-founders to build it. Like, it was almost like him being in gave me conviction that there was actually something to build there. And so, not suggesting that happens for all founders, but I think that like it is hard to understate how fresh and almost kind of vulnerable an idea is when it's at that very, very earliest stage. So definitely don't take that for granted.
Yeah, that's great. And I'm sure, which we'll jump into now, a lot of those learnings and experiences that you mentioned as well, having your first investor, etc., has probably really built out your investment thesis now through co-ventures. And in preparation for today, I was actually going through a few of your LinkedIn posts and having a look around, which is great. And I think you wrote one just 23 hours ago around your investment thesis, which was super cool and in line with what we do, which is great. And for those that don't know or unfamiliar, I'd love to hear about your approach and what the investment thesis is for co-ventures.
Yeah, so I might build in there a little bit. That post was really just a recognition that, hey, like ruthless prioritization also happens in building funds. I don't know if anyone on this call has been on our website, but it's pretty woeful. It is just our logo hanging out on the screen. It just wasn't the highest priority between like fundraising and deploying. But we've had a couple of founders reach out, be like, hey, I think your website is broken. And we're like, no, it's not broken. Well, I guess technically it is broken, but it's like a thoughtful breaking. Living the value of letting fires burn. But yeah, so I think, build a company, a fund is a company, right? I know it might not look like it from the outside, but I deeply, it is a company, and I deeply think of it as a company. And so we are selling a product. And like all of you doing product discovery, we thought really deeply about who is our customer and how do we want to serve them. I think of a fund as a two-sided marketplace. We have customers on either side, right? On one side of the customers, we have LPs, so the people that invest into our fund, whose capital it is we are investing into the companies we work for. And then on the other side of the marketplace, we have founders, and we need to sell to both sides. And so the founder kind of thesis comes out of the fact that founders in Australia or founders from Australia didn't at the time, and I would argue, there's still a lot of work to be done. They don't have a really great pre-seed product to buy. So they don't have a lot of support at that very earliest stage. And so pre-seed for us means everything up until those kind of early signs of traction that a seed stage fund will be like, yeah, okay, I get it. Like there's enough here for me to put a meaningful check size behind it. Some of those early traction points, and I know we might talk a little bit about them today, but we'll invest everything up to that. At this point, I think like 40 to 40% of our fund, we invested at the same time as the company was being incorporated, just to kind of like give you an idea of stage. So really, actually, one of them we have invested before the company is even incorporated in the form that it's going to be in, right? It's like pre-idea stage. We're testing out like what that might look like. So the thesis was they didn't have really solid product for that stage. There's accelerators, there are funds that do multi-stage that will kind of stretch down, but no specialists that really focus on that stage of proving out everything from an idea through to those early signs of product market fit that we start to see that pull from market and pull from VCs. On the other side, pre-seed is like an incredible stage from a returns perspective. So from the LP side, it's a really valuable product. So no one was building a product in that middle. The other element of this is, I was an Australian that moved to the Bay Area. And so I lived firsthand what it's like to step into the Bay Area and to the US ecosystem and the resources available to you relative to the Australian ecosystem. I then watched many, many founders start to kind of come to the Bay Area to raise capital and or start to build their businesses, and watched the kind of just huge success they have. Australia punches way above its weight when it comes to highly valuable companies, really impactful companies and impactful products on a per capita basis. Right? There's only like 27 million of us here. We have 3 companies over $10 billion in enterprise value. And for a period there, we had one of the most valuable private companies in the world that was founded in Australia. We have this accelerating ecosystem relative to other ecosystems in the world. And the capital maturity just isn't quite there yet. It's definitely getting there. Like a lot of really awesome angels stepping into market, new funds stepping into market, which was really exciting to see, but it's just a kind of object in motion and really high velocity motion. And so for us, for the thesis, we think that Australian founders are gritty. We think that they work really hard. They're really innovative. They come from really excellent backgrounds from a kind of technical expertise, education perspective, and just no one is getting behind them and giving them the capital yet at the volume that we want to see to give them a shot to show that it's possible. And so that's our thesis. We want to back Australian founders who are building at pre-seed. They can be anywhere in the world. We just need at least one Australian on the cap table, on the founding team. Then we get super excited about it.
I love that. Yeah, that's great. It's a really interesting niche, as you mentioned before, the micro funds, and I guess filling in that gap between the bigger funds, individual angel checks, and allowing that support, which is great, and that middle ground. So that's cool. And I guess, thank you for championing that stage, because that's certainly where our founders sit in. So to touching on that thesis, and I guess what is attractive to you for that early stage, because yes, probably why the bigger VCs don't focus too much on this early stage, because there is more risk involved, because there's less leading indicators of more educated decision, right? So for us, the big advice that we do through our Accelerate process is to really emphasize demonstrating traction. And there's a variety of ways to do that. So I guess for you, when you're looking at a startup that gets submitted or you're chatting with them, what are some of the early indicators in that pre-product or pre kind of stage that you're looking for that is attractive to at least continue the conversation?
100%. I mean, for clarity, we don't necessarily need traction, right? Like we think of ourselves as a pre-seed investor. We are input investors. We're not output investors. And so I would think of traction as an output metric as opposed to an input metric. An input metric is essentially the founders, right? And the market that they're in. And so that's where we spend most of our time diligencing. Cool. But obviously we do meet companies with some level of traction. And then the companies that we work for, we start to see that traction and that pull from them. And so I think there is a whole host of ways that you start to see this traction. I think the thing to really anchor in on is these are, we are using them as data points that there is a market here that really wants this product and gets value out of this product, and that a really meaningful business from an economic perspective is going to be built. Like venture is not appropriate for the vast majority of companies, right? It is like only appropriate for these outrageously like weird companies that are, you know, grow outrageously fast and really, really large at, you know, astronomical speeds relative to all other companies. That doesn't mean that there aren't loads of other kinds of companies that are excellent, right? Actually, a lot of software companies. I mean, a lot of founders that are building excellent companies that will probably build like $400 million of enterprise value, which like is a lot of money. That is life-changing money and impact for the people that they serve, but it's not a good fit for venture. And so what we're trying to get from the traction points is indications, right? Like little data points that help us abstract like, hey, yeah, actually, we think that this business can grow, you know, to $1 to $10 billion of enterprise value over a 10 to 15 year period of time. And so obviously for each different business, those traction points are going to be different. For example, if you are building a like enterprise B2B SaaS business, right? Number of users is probably not a good metric to tell me that there is real pull here from your market, because like maybe you have one or like half of one or an LOI on one. Like that doesn't give me good data. What gives me good data that your kind of customer, say like big enterprise, really wants your product is that they are hounding you for an LOI or an MOU. They're hounding you for use. Maybe they're even prepaying for you to build that product for them because it's such a painful problem for them. Or they're telling you like, hey, this is our willingness to pay for this problem, right? This is how big this problem is. Or you have done the work to really understand, hey, like these customers can't buy it today because they need like a very high feature set for them to be able to buy it, right? For example, if you're selling into a bank or you're selling into a government. But here is what they're saying to us. Here is like how big this problem is. Here is some really kind of unique way that I might be able to solve that problem. Traction for that kind of company, maybe once you have that, you know, design partner starting to use the product, they are just like obsessed with it, you know, to the point of like irrational use where you find yourself wondering like, oh, is that person okay? Like they are using that product a lot, right? Like it's those kinds of interactions or those kinds of data points that say to you, hey, this like, there actually isn't like a really big product, a really big business yet. I just want to underline this point, like the intensity of the need usually, not always, but usually correlates to it being a huge business, because the pace at which you have to sell this product to generate, assuming, you know, reasonable and LTVs for these products is like outrageously fast to get to $1 billion in enterprise value, which is $100 million in top line revenue, sometime in a like 7 to 12 year period. And so you're looking for that like heavy pull where people are trying to buy it. I'll give you a tactical example here. For the first time that I've ever seen, in the beginning of 2023, I met over 5 companies that had built a product, put it into market, and were $1 million in revenue in under 6 months. Right? The pace at which the market pulled those products for them because of the need for AI innovation was just like astronomical. And so you're looking for that kind of level of pull, whereas, you know, like the traction metrics that you would see for a consumer product, it's going to be very different. Right? If you say to me like, hey, I have an LOI from a single consumer, I think it's a huge pull from the market, I'm probably going to disagree with you, right? Like I could probably find one crazy consumer to use any product I build. I'm not a builder, so you can imagine how terrible that product might be. So for consumer, you're looking for many more people using a product. You're looking for much more indication that they're using it all the time, because the nature of a consumer app is really different than an enterprise, like B2B, boring SaaS. And so my suggestion for you, if you are building somewhere around the kind of like early MVP, looking for those traction points, either wanting to have conversations with investors around like pre-seed, especially like in Australia, because something I will name here, people like marginalia on pre-seed in Australia, we're fairly unusual when we think about pre-seed in Australia, right? Pre-seed for a lot of Australian investors is a little bit further down the risk curve. So they do want to see, you know, as you mentioned, they do want to see like a few more traction points. It's kind of like halfway between what I would think of as pre-seed and seed in kind of like the more US parlance. And so if the folks on this call, they are looking at doing that, I would encourage you to really like think from fundamentals. what is this business going to look like at scale? When it is hugely successful, right? What does that look like? And once you have a vision for that, what are the data points? What are the indicators for you today for these businesses that will tell you that you think you're on that trajectory? And the last thing I'll say here is you, the founders, are the biggest investor in this company and will be probably for the first like 36 to maybe even 48 months of its life in the best case scenario. You are going all in on a single bet. And so it's actually in your interest to work out whether it's a good company or not as soon as possible. I have seen quite a few wonderful founders, really excellent teams spend, a half decade of their life building something that wasn't going to work because they were so focused on proving that it would work as opposed to really listening on whether it wouldn't. And so it's actually a bigger tragedy to see cycles being done on businesses that you can kind of like quickly validate and either kill and move on, or like really, maybe operate as a lifestyle business or something, as opposed to taking those learnings, pivoting and building your next thing. And so I think at this very early stage, I'd really encourage you to kind of dispassionately assess, are you getting good data that this company or this product for this customer is being pulled? And if not, have the courage to pivot, have the courage to try something else, because you will like iterate your way to something really exciting if you have the courage to listen to it.
Yeah, Maxine, that's wonderful advice. I'm even taking notes here as well, which is great. And I guess really speaking our language about, that safe way to start your journey. And that last point, a lot of our founders or people are, they're probably working full time in a role. They've got this side project that they're currently building. At what point should they actually transition and forego their career to jump into it? Well, it's important to get leading indicators from validation that you're onto something there, as you mentioned, before stepping into life's work where there could have been early signs of whether it needed a pivot or whether the problem's just not, the intensity of the need, as you mentioned, the size isn't big enough at this given stage. So I think that's wonderful advice. Thank you for sharing that. I was just going to, another point you touched on there, and you mentioned the word gritty in terms of the founder, and one of the biggest things you look at too. So, what are really some of those key traits that you look for in a founder, building their startup, and what's, I guess, some advice to those founders as well in terms of not becoming someone they're not. Right, like that's super important, because everybody wants to be themselves. That's when they get the best out of it. But I guess what are some attributes that are important that you see in the founders that you invest into?
Yeah, for sure. I mean, I actually think it's a really good jumping off point because that process of iterating around, like, it's so fucking hard. Like, especially when it's not working, like just to take L's constantly, like put all of this effort in and the courage to be like, nope, that's an L. Yeah, that one's still an L. Yeah, this new one, it's an L again, and have the courage to just like keep going and the commitment that you will get to an outcome that is, valuable. That requires grit. So the reason I say it's a good jumping off point is because it's a kind of perfect layout to like why we care about grit and why we care about growth mindedness. You made the point there of kind of like not being something that you're not. I believe that every single human on the face of this planet can be gritty. Right? Resilience isn't a personality trait. It's not something you're born with or not. It's something you earn. And you earn it by doing really hard things and showing yourself that you're capable of incredible stuff. So it's kind of like a muscle, like if you currently gave me a 50 kilogram dumbbell and asked me to bicep curl it, like I just couldn't. And I actually don't know that I ever would be able to, but like maybe 25 after a year.
I couldn't either.
And so I think my point here is like grit is something that is built over time. It's like any other muscle in your body. It's like seek to do the hard thing so that you can do the even harder thing so that you can do the even harder thing. Same thing with resilience. And it's taking that growth mindset, that like deep belief that you are capable of anything provided with enough time and effort on target. And so we really look for those two traits in a person, right? Skills in a person that we're backing because we find them to be fundamentally important to get through this period and find insight, and or if you don't find insight, like find that out as fast as possible and close it down. We've already had companies in our portfolio that they raised from us, They went through that process. They were extremely diligent. They worked extremely hard, and they identified, hey, that thesis we thought was possible, that business we thought was possible, it wasn't. It's not going to happen. And so they closed down and they distributed 40% of the capital back. Right? That's what maturity looks like for a founder to me. I would far prefer that than someone kind of like riding into the sunset, like no holds barred, refusing to take no for an answer. If you could rationally assess, hey, I don't think that this is possible. But we're talking about this in like black and white, you know, like it's not easy to be able to be like, oh, I now have sufficient data, tick, I know it's going to work, or cross, it's definitely not going to work. There's this constant judgment call of like, collect more data on this question before leaning in, or am I being too perfectionistic? Or this constant judgment call of like, no, it's not going to work, or am I just scared to fail? Like it's really messy, emotionally messy, tactically messy, actually out there. Keith Roy-Bois talks about this actually in a really elegant analogy, which is, you know, if you look at even a kind of high performance machine on the shelf before it's ever been used, right? It's really easy to be like, great, piston goes there, you know, petrol goes here. I can see how it works. Try and diagnose what's going wrong while it's in the front of a Ferrari moving at 200 kilometers an hour. Like it's so hard. And make changes, like you just lose all of your fingers if you're even able to hold on. So that's what you're having to learn how to do as a high performance founder. And so we look for those grittiness, that growth mindset, because you're just constantly learning the whole time. And it's really fucking hard, and you need to like work out how to make it work, because there's no formula for making your particular idea and your particular business work along that journey.
Yeah, that's great. I love I guess the ideology around grit. It makes such sense. And reverting back then as well to the honesty and authenticity in conversation early stage with people like yourself. So, you know, that could be a founder saying, hey, we're at where we are now. We had 5 L's and 5 pushbacks that were sucked, but we actually took on that feedback to where we are now, where we got a W, and that's why we're having this conversation, as opposed to just coming in, just being like, oh, it's just been this, you know, rose petal, you know, great process. So I think that's a really important point too. I was at a talk, Reed Jobs, who's the founder of Yosemite Ventures. I'm not sure if you know him. Last week it was actually a biotech conference, and he spoke about that. Just want people to be authentic. Where are we now? We're using this money to just get to here. It's not we're getting this to be the next billion-dollar company. It's just being very authentic and honest of where we're at and what we need this for now, which is really important.
Totally. Yeah, actually, I think there is a nuance here to name. My observation is that the Australian ecosystem is just like sick for authenticity. So like when you are pitching Australian Australian VCs, like that level of like pragmatism and authenticity, it's really important you can speak that language. If you are pitching US investors, I have found if you come in with that like pragmatism and authenticity and talk a lot about the L's, they just won't see the opportunity for W. And so, especially if folks on this call are from all over the world, my nudge for you is to remember you are selling. You are selling a cap table. You have a finite amount to sell it, but it is a sales process. It is an enterprise sales process. So especially for the big funds, right? You have a partner who you're trying to convince, or maybe even like a principal or an investor who you're trying to convince, who then has to convince a partner, who then has to convince their partnership, and they all have to agree. And the smaller funds, maybe it's a kind of more B2B sale, right? Or an SMB sale. You just kind of need to convert one person, but still a sales process. And so know your audience and sell to them in the way that they want to buy. So if you're pitching me, right, I want to see your huge vision. I absolutely want to hear about all of the L's, but I'm most interested in how you learned from those L's, because I want to see you being a learning machine. I want you to be able to move through like outrageously large volumes of data and outrageously large amounts of context and find the signal in it and hone in and then test it and learn. Whereas other investors, right, they're not going to index on that as much. They're going to index on stuff like, how big can it be? Tell me how it's a moonshot. And that's what makes it so hard. Like, just to acknowledge that for a second, it makes it so hard as a founder to raise, because, you know, it's not as if, I mean, I am right now, but most investors aren't out there being like, hey, here's the cheat codes. Like, here is what I find compelling. Here is not what I find compelling. Like, talk to me in this way, not in this way, and like highlight these things. They're just not doing that. Or if they are, it's in like closed doors. So, I think the last thing I will say on like running that process is like top of funnel is everything. You just got to make sure there's a high volume, because the probability, like all of the things that have to go right for you to raise a round of capital are actually like quite a lot.
Yeah, I was actually going to touch on that, and then you mentioned it. It's funny because I think certainly here in Australia, though, it's probably from trying to understand the person from the venture company or the investor, whoever it is. There's so many, I guess, podcasts and readings and thought leadership posts, etc. So certainly for those that you do target, as a founder, you might not think about it, but just take half an hour to an hour prior to that meeting and sit down and understand, okay, cool, what did they mention? Because if we can unlock that, it's going to probably put yourself in an even better position as well for that meeting, which is cool. One other point to go back to as well was having movement and momentum and keep rolling, say in your product development or in your vision as well, when you are getting L's too. So that comes down to that grittiness. You mentioned, even when you're in business and you're up and running, there's constant L's every day, and there's also wins. You want to make sure there's more wins than L's. But in terms of, rolling through that, how do you see some founders as well that you do talk to that might not, you may not invest to as well, that really struggle for that grittiness as well, and let that really affect them in that journey?
Oh, 100%. Yeah. I think it is, I'm not sure that you would have described me as gritty if you had met me when I was 25, right, in a law firm. It is, but definitely I've become more gritty by building, right? There's like an element of like you learn by doing. So it's absolutely a skill that you can learn. Part of it is, and there's some really wonderful work. There's actually a book called Grit by Angela Duckworth. That's definitely worth reading if it's a skill that you're looking to develop. The other book I would strongly recommend, bizarrely also by Angela Dweck, called The Growth Mindset. Those both I have found extremely informative on the process of personal growth and the process of becoming extremely gritty, and why those two skill sets are worthwhile developing. But the kind of shortcut is grit is developed by doing hard things. So it can be anything from like sports through to like interpersonal dynamics through to intellectual challenge. It's the choice to continue to do hard things in the pursuit of learning how to be gritty. Actually, Alicia from Airtree, I run a podcast called First Check, and we interviewed her for First Check, and is in part of the prep, I was talking to people who know her, kind of what are the elements of Alicia that you find really impressive or kind of really inspiring. And one of the people mentioned, one of the things for her was just that she is like outrageously resilient, like unflappable. You cannot throw anything at her that she is not capable of metabolizing and moving forward. And to me, that is just the highest compliment, right? Like that is grit to me, the capability to just do an incredibly hard thing and continue to move through it. That doesn't mean be like toxically positive and pretend like it's not hard. That doesn't mean, just think that like everything's going to be fine and be Pollyanna and just like, like fly off into the sunset. What I mean is kind of the act of bravery, which is knowing how hard it's going to be, knowing that there are going to be moments that you're just grinding it out and doing it anyway. The other thing is like the skill set of grinding, the skill set of doing a hard thing. I think one of them anchoring on the growth mindset is knowing that like this is all about learning. It's not necessarily about like it being easy. And actually you shouldn't be aiming for ease. You should be aiming for learning and really leaning into that reality. I think the other element that I find can really help people when they are learning the skill of grit is what my executive coach calls kind of the difference between suffering and pain, right? Like doing a hard thing, pain is kind of inevitable. Emotional pain by frustration or sadness or regret or, disappointment, but suffering in it, like sitting in it, is not valuable, right? You just get no value out of that. So working out how to enjoy the push in the same way that you enjoy a kind of hard workout. When you're like ugly grunting mid bicep curl. I don't do a lot of bicep curls, despite the amount of times that I've referenced this, but like, in a like hard workout, like ugly grunting, but still kind of enjoying the exertion. That's kind of what I think you want to get to, but in that kind of professional sphere.
Yeah. No, I love that. I love how even just the dynamic of our conversation right now, we've gone from people maybe coming in and thinking, cool, it's a checklist approach, to how it's around mindset and perseverance and being, which is great and incredibly inspiring. I've written down those 2 books as well, so I'll share them with the community after too. There's one I will add there as well called The Magic of Thinking Big by David Schwartz, which I give to all our team, which is fantastic. I was thinking just then as well around the grittiness and being resilient. There's some fantastic stories that you can just have a look at, is how the great tech companies have pivoted from where they've started. And that's a real example too, thinking, cool, we've started, we didn't hit this market, had no good, but we're still resilient. We're going to do this, 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 and this. And a lot of companies or founders will just fall off along the way, whereas they'll finally find something that sticks within something they're passionate about, a problem they're solving. So I think, having and researching some great pivots is really good for those founders out there to have a think about, cool, if I get some feedback, well, I've seen other companies do it, just remain resilient too, which is cool.
100%. There's actually one of the best pivots, or maybe best feels like a strong term. One of the most impressive pivots in the history of business pivots, I think, is Intel, right? They are the dominant company. At the time of the pivot, they are the dominant company in Silicon Valley in chip making, and they pivot to be a compute company. And they do it over a 2-week period. It's outrageous. Andy Grove has got to be one of the best operators of companies that's ever existed. And if you're sharing examples of incredible pivots, I cannot recommend that one enough to just study.
Cool. I'll definitely be checking that out and again sharing it. Thanks very much for that one, Maxine. We've got a few minutes left, so I just want to charge through a couple of quick questions before we leave everyone to finish up their day. What trends or shifts are you seeing probably just this year and going into next year of note?
Oh my God, so many. I feel like, especially in the kind of age of Gen AI, it feels like the ground is just moving below your feet, right? The trend shift is constantly moving. I think relevantly for this audience, making some assumptions that most of you are probably building on some, with AI involved. Coming into the end of last year, there was this kind of dominant, a group of dominant investors that were all investing in infrastructure layer. So it was products that optimized, which model product would particularly use, or optimizing the way dev teams used different models, or the reliability of models, or all of those kinds of things, right? They're picks and shovels that help you run these models. There has been a cooling off of that, of investing there, maybe because there's a kind of view that it's been saturated. Everyone's in the US, everyone's kind of made their bets. And now there's a real focus on the app layer. Maybe kind of building on that, a theme from, actually Sequoia wrote a really interesting article about ChatGPT's latest model. It's called Strawberry. The article is called Strawberry. And they kind of coined the term services as a software. So really naming that we're moving over to this world where you're starting to automate services businesses with software. I mean, in my humble, it's kind of just a rebranding of a dynamic that we've seen forever. And I started angel investing in 2017. So arguably we've been automating services for quite a while with software, but don't anger the gods. But that's definitely a theme that I'm seeing a lot more folks invest in. And I think to be generous to them, the reason that they're talking about it now is because of these, the new models that are coming out, creating kind of sequential thinking opportunities to a much greater degree, and kind of projecting ahead what's going to be possible for much more complex thought through these models or complex prediction. What else am I seeing? Trend-wise, in terms of investing, I think 23 was outrageously hard for anyone who was out there raising in that period. I'm sure you can attest to it. 2024 was hard, and the trend line seems to be that 25 is going to continue to be hardish. i.e. it's like getting better relative to how it's been for the last 2 years, but it's, I don't think we will see an environment like 2020 and 2021 ever again. Like, let's just treat that as an anomaly. This is starting to feel a little bit more like 2016, 2017, maybe 2018. Unless you are building in like a certain particular place, or you are coming from a certain particular background, from an operating background, those are anomalies and like funded in a different way. But for the vast majority of builders, it's better than it's been for 2 years, but still not that easy. But if you've been out there for a while, the good news is it's slightly easier. There's more capital flowing around. And then actually I think I got the last one that's worth noting. It affects you indirectly, which is there is a large-scale reconsideration in venture of what the ecosystem of venture is going to look like. At least in the US. I don't know if this will move through into Australia, but essentially there has been a kind of capital lockup and not a lot of distributions back to LPs. And LPs are starting to just allocate to a select few. So it's like consolidating in the same way you're seeing in the like sales tooling market, a consolidation in sales tools, you're seeing a consolidation in VCs. And so if that happens, you will start to see less VCs allocating capital, but the big ones will get bigger. So there's probably some implications.
Great insights. Yeah, that's super cool. It's good to hear about the funding positive signs, and I guess the reverse positive out of it as well, is it all leads back to making sure early stage that you don't just want to necessarily build a company that just solely relies on investment, because if it's drier, but it means you've got to focus on paying customers. So finding that out early is super important, which is great. One final question that I do have. So I know for founders to get in touch with you, you've got a form on your website to submit a pitch deck. I was actually going to ask, what makes someone stand out, but I'm going to ask you, if someone submits their pitch deck to you or get in touch, you're obviously incredibly busy and have lots of people, messaging you to catch up. How does one illustrate grit through a pitch deck or an email?
Oh, that's a spicy one. We don't filter for grit at that stage. So you don't have to worry about trying to demonstrate grit in your email. But I mean, if to answer the question, not to dodge it, just email me 100 times. There are people that do that.
That's right.
So, I mean, just not taking no for an answer, that so far hasn't worked, let me just say. So far, I have yet to be badgered into an investment, but never say never. But yeah, no, we don't filter for grit in the email form. I will say also we respond to every single person who reaches out to us via that form. We will look at every single pitch deck we receive and respond to every single one of them. We might not be able to give feedback on all of them just to kind of manage expectations, but we will look at every single one of them. And what we're assessing there is, do we believe that there's a cool, big company to be built in this space? And is it a good fit for our fund? So we invest in companies that can be global from day one, pretty common in the Australian ecosystem, which means, things that are particularly focused on an Australian opportunity, i.e. you're building in healthcare and a big part of your product is NDIS funded. That just doesn't scale to the US, or mostly doesn't scale to the US. But if you are building something in our wheelhouse, we'll have a look at it and would absolutely love the opportunity to review it.
Amazing. Thanks so much, Maxine. And just thought, if you wanted to give a plug to your podcast and any other, platform mediums that our community can follow you on, feel free to let us know.
Yeah. The podcast, I think it can be a great resource, especially if you're thinking about raising sometime soon. Cheryl and I are just nerding out on early stage investing. There's probably a few in there that are particularly useful for founders. Actually, Adam, our producer, we just get to do the fun stuff. So we get to interview people and think about what we want to talk about, and then he, God bless him, does all the boring stuff. But it also means that he crunches the numbers and gets the stats. And he told us recently that about 50% of the people that listen to our podcast, which I think is now maybe 1,500 people listen per podcast, 50% of them are founders, and which I was really surprised by, but I can understand why, right? A big part of being an effective salesperson is understanding the person you're selling to. And so at this point, if you are raising capital, you are selling to investors, you're selling your cap table to investors. And so it's a great way to understand how early stage investors in Australia are thinking.
That's awesome. I love it. I'll send a link as well to that. Maxine, thank you so much for taking the time to sit down with us. Really, really appreciate it. Good luck with your travels overseas for the remainder of the year, and look forward to an exciting 2025.
I appreciate it. Thank you so much for having me on. I'm really
Nice.
grateful to be here, and good luck with the building, everyone that's on the call.
Thank you. Thank you, everyone, for tuning in, and have a lovely afternoon.